So assume you're working as a senior data scientist for a financial company and you are seeing that there is a decline in credit card payment amount per transaction. Per transaction charge are going down. And now you have to investigate what could be the root cause behind it. So how would you go about solving this case? I'm Ishan. I have around 11 years experience in the field of data science and analytics, currently working as a data science manager. Here we would be having a discussion on a case study. Hey Karthik, so let's get started with a quick introduction of yours and then I'll share a case with you. Understand there is no right or wrong answer for this. It's more like a brainstorming exercise. So I understand how you go about thinking about a problem, how do you structure, and basically looking into a problem solving approach using the right data techniques.
Okay, sure. Myself, Karthik. First of all, thanks for joining this mock session. I have close to 9 years of experience in data analytics field. For the past 5 years, I've been with PayPal, and before that, I was with an analytics consultancy, View Analytics. That's my short intro.
Okay, awesome.
So there is a decrease in the credit card amount per transaction, right?
Yes, credit card payment amount per transaction.
Per transaction. Okay. So
and yeah, sorry, one more thing, as you would be giving answer, I'll be taking notes. If you feel I'm writing, don't think I'm not listening. I'll be just taking notes.
Sure, definitely. So first up, before starting, I think I would like to understand the definition of average value per transaction. So does it include reversals? Typically, it shouldn't. So I just initially want to check if the metric includes reversals or not.
Okay, that's a great point. But let's keep it simple. Assume we are not considering reversal. We only talking about like the upfront transaction, which.
Okay. And another question is, where is this decrease happening? Because typically in the payment domains, customers can select multiple FIs during their checkout process, right? So are we seeing decrease in average order value from transactions where only credit cards were used, or from transactions where credit cards are one of the multiple FIs that were used?
So assume we don't have data for other mode of payment. Only thing where we can access the data is related to credit card payments.
Typically, there will be data for these kind of scenarios. So no worries. So like I understand, okay, the credit card volume per transaction is decreasing. And I am assuming that all other FIs have a stable or a significant increase during the same period. So that's my assumption here.
So you can assume it to be stable.
Yeah, I'm assuming it to be stable. So my next question would be, what is the factor of decrease that we are talking about? Is it a significant decrease, or is it just few basis points decrease that we are talking about?
You can assume it to be a significant decline, let's say double digit.
Okay. Next question obviously is, I'd like to understand the nature of decrease. Is it a sudden decrease in the cost past couple of days, or gradual decrease for the past couple of months, or even past 4 or 5 weeks?
So it's more of a sudden decline, and it is happening for over 2 weeks now.
Over 2 weeks. Okay. And I guess in that case, I think before even getting into So I'll just outline. If it was a sudden decrease, I would have just looked at this particular scenario as a data issue around logging or bugs in the app or recent product change. By recent product change, I mean there could be a change in the FI selection page with respect to the default FIs that were surfaced to customers, or there could be a cashback for other FIs as well. But since in this case, we are assuming a gradual change, I would like to investigate further to understand the reason. So since this is something to do with credit cards, I would first like to understand if there was a change in risk assessment for high value transactions or any auth rate related issues. So just to explain auth rate, it typically means when a customer chooses to make transaction using a particular FI, there are cases where the transactions will not go through. So that is what we refer to as auth rate. So was there any auth rate issue? Like, I would like to understand one of these two issues.
So we have not made any significant change in our existing processes.
Okay, makes sense. So then in that case, there was no change made to this. So that could not be the reason then. Just to fragment the metric further so that we can understand more. So average order value, or AOV, as we mentioned, is a fraction with transaction in the denominator. So was there any increase in the transaction during this time period? It would be much better if we consider the trend of transactions per user so that we get a normalized or standardized value for comparison as well. Was there any increase or
So
decrease?
how are you defining transactions? Are you talking about like the number of time they are swiping the card or like putting it through payments? Can you be a bit specific about what are you referring as transactions?
So typically in payment industry, they wouldn't refer, or the definition is not defined as orders. Instead, every payment that happens between, let's say, customer to customer or customer to a business or business to business, those are referred to as transactions. So here, what I mean by transactions is the number of times a payment was made to another person or another entity. So AOV, average order value, if to define it, it is the total or sum of all the orders or order values for successful transactions or successful orders divided by the number of successful transactions. So that is the AOV definition. So since that is decreasing, I just wanted to understand if the denominator, which is the successful transaction, was there any increase in that particular transaction?
It was within the same ballpark, which we have seen a couple of weeks back.
Okay. So same ballpark. So can we look at transactions per user? I assume that also would be in the same ballpark in that case. So that's also the scenario, right?
Yes.
Okay. So why I asked this question was if transaction per user has increased during this time period, I would further segment transaction amount buckets. So basically just to generalize it, I would try to understand how many transactions were between $1 to $10, 10 to 25, 25, 50, 50 to 100, and so on. So basically, I would have split it into percentiles to understand if there were increase in lower denomination transactions. So since that was not the case, then we would like to proceed further, which is like since there was no increase or like the TPU remained the same, which is transactions per user remained the same, I'd like to understand if the decrease is reflected across different segmentation. And here I would like to check not just TPU, I would also like to check what percentage of the transactions are declined as well. So when I mean declines, what percentage of transaction attempts are getting declined as well. So I'll explain it further. So for segmentation, I would first start with the first one, which is age of customers. Why? Because a lot of times what happens is if a customer or if anyone gets a new credit card or if anyone joins recently, their risk assessment would be somewhat limited, meaning that whichever FI they would try to use, they would be prevented from doing a lot of high value transactions. So that's why I would like to understand what is the split looking at like across age of customers.
So when you say age of customer, you are talking more about the age on this platform, right?
Age on the platform, yes.
Age on the platform. So assume there is no significant change compared to past few weeks.
Okay. Then in that case,
like when I say no significant change, there's a decline in specific segment. You can say it's more like decline in both the segment, like existing customers as well as new customers.
Was there any change in the mix shift between, let's say, new customers or existing? Okay, no change in mix shift as well. Next, I'll go through, check the TPU or risk declines across income bands, meaning that if there was a change in mix shift between these income bands as well, the AOV or average order value might be down.
So can you talk a little bit more about what you mean by income band?
What I mean by income band is like, so payment companies typically have a certain categorization for each customer to determine which age band these customers fall into, right? So there would be typically, to generalize it, there might be three. One is low income band, medium income bands, high income bands as well. So
based on their salary, earning, or income from business?
I wouldn't say just salary, based on their, I would say based on their payment activity as well, right? So I'm just considering a generic population. I'm not considering businesses here. For generic population, based on their payment activity, they would have some kind of classifications around it.
I'm still not clear with your definition of income band. So let's say if you have to put some rules or data logics that this is high income, this is mid income, this is low income. So how would you define that?
Okay, I'll take a step back. So rather than defining it, why not look at the case whether there was an increase or decrease within this particular band?
I hear that point, but I'm still not clear where is your band defined. So I can't provide much input till the time you explain it.
So it could be based on payment activity, right? If someone or if a particular cohort of customers are making, let's assume, right, this is still an assumption. Let's assume they are receiving close to 10K worth of transactions via our payment gateway. Maybe they would be high value customers, right? If they are receiving somewhere around 5,000 to 10,000, they could be medium. Less than that, they could be low as well. It's just a abstract definition, at least for now. So the idea is that based on these bands, there might be difference. There might be difference in how they are utilizing the funds or how they are spending as well. So that's why I would like to understand what is the comparison across income bands.
So would it be safe to say that income bands are mostly on the basis of their spending behavior or transaction receiving behavior?
So typically, considering internal data to define it, that would not be a better way of doing it. But still, for our assumption, let's consider it as based on historical spending activity.
Historical spending activity. Okay.
Yeah.
So here what we have seen, let's say if we divide three clusters or cohort of customer, high spenders, mid spenders, low spenders, we have seen some regression happening. So people from high spend bucket has moved to mid and mid has seen some regression to low.
Okay. So what I mean by mix shift is not the change in income bands for these customers. What percentage of customers in high income band are making a transaction? What percentage of medium income bands are making a transaction? Similarly, what percentage of low are making a transaction? So rather than getting into that level of detail, I would like to first understand this one.
If you are looking into the absolute transactions, number of transactions, there is no change in these segments. However, if I look into the amount of transactions, like the amount is spent on these transactions, there is a change.
Okay, makes sense. So understood. So there is no change in mix shift, but rather what is happening is these customers are indeed spending lesser than what they usually spend. So that's my understanding here. So I'd like to check a few more things before I drill down on that part. So I would like to check across the different credit cards, right, between Visa, MasterCard. I think there are scenarios where, or there are studies where American Express, which is a minor player but a high value customer. So are there difference in terms of the type of credit cards being used and the average order value?
Okay. So I'm assuming based on your input, let's say this financial company is issuing two kinds of card, Visa, MasterCard. You can say that there is a decline in both the categories.
Both the categories, as understood. And this makes sense. Decline in both major categories. Typically, so I'm assuming a payment company. So I'll also like to understand if the decrease is happening for core online checkout or for offline transactions. Like currently, customers can use their digital wallet to pay in-store transactions as well. They can use QR code to make transactions as well. So which segment is driving AOE down?
So which one are you defining as online or offline? Can you share the definition again?
So online is something where, let's say, customer purchases something in Amazon, they pay through online modes, right? So the transaction itself happened through online mode. For example, Google Play Store, Amazon, any other e-commerce website, they pay online. They purchase online, they pay online. Or in-store where they go to a local Walmart. During the checkout process, they pull out their mobile phone, scan the QR code and make a transaction. Those are offline or in-store transactions, right? So which category, like are there any difference in AOE for these two categories? Or are we seeing difference in both of those?
Majority of the decline is coming in online.
Majority is coming via online. Okay. Just to summarize, so this is mostly what I initially thought. So just to summarize, the decrease is typically coming across all kinds of income bands. But what we are also noticing is that the AOE for high and medium income bands are also decreasing. And also it is decreasing across major credit card providers. And it is mostly happening in online cases. So that's the summary so far. But I'd like to check few other things as well, like I mentioned. So I'd like to understand if since the decrease is mostly online, I would like to understand what's the risk decline rate for high value or across denominations of transactions. What is the risk decline, right? I would like to categorize or put a percentile bucket for transaction amount and would like to understand what is the risk decline across these transactions. I'm
Can you
assuming
define risk decline?
yes, exactly. So when a customer attempts to make a transaction, there are multiple scenarios why the transaction would not be successful. One is maybe our payment is declining this transaction because it assumes the transactions or it estimates the transaction to be a fraudulent transaction. That is risk decline. And there are other declines outside of it, which is card issuer declines, network issue declines, bank declines, and other scenarios. But typically, risk declines is something which is in the control of the payment company. So, yeah. So customer attempts a transaction. There could be multiple ways it could get failed. Only the transactions that are not declined or customer did not drop off or there aren't any other declines from the other parties that are involved, like card issuer, banks, networks, and so on, those transactions would be successful. So since there could be scenarios where customers are attempting high value transactions, but then they are declined as well. So that's why I want to bucket them into different amount or different percentile buckets and try to understand the risk decline or risk decline percentage.
So, like I said earlier, we have not made any major change in the processes. So we have not changed our risk buckets or not put new safety measures. So risk decline or network error, these are not the reasons. We have not seen any major change in the metric for these declines.
Okay. Makes sense. No product change, no risk change. Is there any particular market that this decrease is happening? I know I should have asked it before, but the reason why I approached it this way is I wanted to initially cover product changes so that we can quickly troubleshoot changes and take back the changes and minimize loss. So that's why I approached it this way. But I like to revisit the methodology a bit and try to understand more on this.
So there is no specific market, like there is a decline happening across all the markets, but you can say the developed countries has extent of the decline is more or less within the 10 to 20% for all the markets.
And is it because of seasonality?
How would you be defining seasonality?
There are certain scenarios where, for example, if it's Thanksgiving Day, the transactions would be higher. If it's Black Friday, similarly, transactions would be higher. So there are certain seasonal elements that would happen. And if we are comparing that event in the past week or so, maybe we might see a decline. But typically, there are events which kind of skew the numbers a lot. Are we right?
You can make an assumption that there is no major shopping or festival or any big billion day kind of sales. These things are not happening. So it's a normal day.
Okay. In that case, I'm not sure why this could be, but I would like to understand more on. So you mentioned something like the average order value is decreasing for high and medium customers, right? I'd like to understand if their transactions per user is increasing.
Sorry, is there any transaction where?
If these income bands, high and medium income bands, transaction per user is increasing.
No, there is no segment. Either it is stable or it is declining.
Okay. Then from all the possible questions or hypotheses that we went through, it seems like customers are typically making or using or transacting lesser in terms of dollar value within our platform using credit card. So that's the case. But as of now, whatever possible reasons that we discussed, it looks like there isn't any reason that is happening here.
Okay. Can you think more about some change in users' spending pattern?
Can you explain that? Because we went through this and there wasn't any seasonality, or is it like a particular month where customers make lower volume transactions? Is it that scenario?
No, I'm not talking about lower value transactions. I'm saying that maybe some change in user buying behavior.
Yes, that could very well happen, but at least for now, it would be difficult with the payment data to understand why that is happening. There could be industry studies or market research which might help answer that question much better.
I understand, but can you take any proxy from the existing payments data? What kind of payments are happening? Can you draw some conclusion? on the basis of that.
That's why I want to revisit my other question as well. Are average order values decreasing for other FIs as well?
Like I said, assume we don't have data for other FIs. I know in ideal world there might be data, but let's say you are only constrained with your payment instrument or your financial instrument data.
Okay. Yeah, there could be reasons around, let's say, maybe customers are using other payment gateways or payment companies to make their high value purchases, or they could directly be using their credit cards for high value transactions. Maybe they are getting EMIs or like EMIs when they're making transactions directly via their credit cards, which they are not getting via payment gateways. So these are some reasons that I could think of, but let me know like if some of this.
Think like this, because we have not seen the change in the number of transactions, right? We've seen the change in amount per transaction. So if they were using some other financial instrument, some other competitor product, then we should have also seen a decline in our number of transactions. That is not happening.
So it could also mean that typically from the time duration that we are comparing, maybe there was an increasing trend because of which the TPU remained the same. But rather, if customers were continuously using it for high value transaction, mind you that high value transactions would still be 1 to 2% of the transactions, but since the value is much higher, it will drive the AOE $3 or $4 higher maybe. So it could be a scenario, but let me know if it's not.
So are you suggesting there is a major decline happening in the biggest spends?
There could be a decline happening in the biggest spends that maybe we are not able to capture, or like we are not seeing it because we are considering transactions per user. In the meanwhile, in the time period that we are considering, maybe transactions has decreased, but we are missing out on high value transactions.
So you can see that yes, there is definitely a decline in the share of high value transactions. That is where we have seen the major hit.
You mean there is a decline as in there is a reduction in number of customers using it, right?
Yep. So if I draw the distribution with there would be some transactions which are generally very high value. That distribution has shrunk.
Okay. Okay. And there isn't any difference in this declines as well. So typically it means that customers are not even attempting these high value transactions. So that could also be happening, right?
They are not attempting. So like I said, we have not seen any major payment declines happening. It's just there is a reduction in high value transactions.
Okay. Makes sense. Was there any, let's say, there could be scenarios where our competitors in the same industry are offering cashback for high value transactions?
Assume we are very competitive. So if competitors has started offering some new cashbacks or discounts, we would have replicated it.
Okay, understood. Yes, to summarize whatever we have discussed, there isn't much difference in terms of customer age of customers, but there isn't any difference between income bands as well. But what we are seeing is that for higher and medium income bands, the volume or average order value itself is decreasing. And this is majorly happening online and for major credit card, all major credit cards. And this is not, there wasn't any recent product change. There wasn't any change in risk assessments. There wasn't any change from our end, which could explain this. So based on these and as well as whatever cuts we discussed, it means that, and there hasn't been a drastic change in our competitor strategy as well. It could really be that customer spending on high volume transactions is somewhat down across the geography as well. So that could be a scenario. But to understand more, maybe to understand that further, maybe we can look at. So I know that is happening, but I'm not sure how we could come up with a causal link with the data that we have as a payment company.
Okay. So I think, Karthik, this is the point where we can summarize the mock. I can start talking about generally what are the things which worked out well, what are the opportunity areas. Would that be fine?
Sure. Yeah, definitely.
Okay. So first of all, let's start with positives. So I think I really like your domain knowledge. Throughout the interview, you have continuously displayed a very strong knowledge in the payments industry. You understand a lot of technical terminology. You were pretty thorough on what could be the risk. So great domain knowledge. I think you were pretty structured in terms of your communication. Like at any point of time, I didn't feel that you were blabbering or speaking very fast. So you were very coherent when you were thinking. And I like the way you have broken down problems, or like the broken down the potential root causes in a very structured way. So overall, there are a lot of positives. However, if I think from an interview perspective, there are few more things which could have gone better. So firstly, if we look into the content, no problems. The root cause analysis are generally very open-ended. Here we are not trying to find, did you actually establish the causality or not? That is never the objective. For root cause analysis, we want to think, can you break down a top line metric into first touch, second touch, third touch metric? Can you be very thorough? Can you think about all the potential areas where this problem could be explored and scoped? So I could have concluded it in earlier that, okay, this sounds like a best reason. So that way it's not a concern, and never we judge any candidate on what kind of pointers they have. Yeah, if you end up sharing like the exact answer, that's like an icing on cake or cherry on cake. Now, few things which you could have done better. So my personal preference is, when I'm taking an interview, I always think it like I'm writing an analysis design doc. So I will list down like indexes that what are the things I would be doing. So for example, if I have to answer this question, I would have started with upfront telling my interviewer that, hey, this sounds like a root cause analysis problem where we have to understand where the credit card payment per transaction is declining. So I'm going to approach this problem in the following way. Firstly, I'll spend some time understanding the situation, defining the metric so that I'm having the right interpretation, which you have done, but later in pieces. Second thing, once I'm very clear with the situation and the metric which we are going to focus, I would start with ruling out some oops moment. Maybe we changed the metrics definition, there was a logging bug, there was some marketing campaign which we were running earlier, or like if there's a decline happening across all the financial instruments in the company, those would have been all under the oops category. Second thing, once I did, most of the case you don't find your right answer in this, then my second approach would be breaking down this metric into more granular pieces like the way you have done. So if I'm saying that there is a decline in credit card amount per transaction, so there could be, there's a numerator, there's a denominator, right? Numerator is total payment and denominator is a number of transactions. So is there a decline happening on both, and the rate of decline in payment is higher than the rate of decline in transaction, or is there a decline in amount per transaction? So that is what you have also broken down, but it's just communicating upfront would have been helpful. Once I identify what part of metric is going down, I would start with running some segmentation analysis. Or before that, I'll say we will look into some internal reasons and then external factors or user behavior change. So I would start with, let's say I shared that there is actually a decline only happening in amount per transaction. So we will start with segments. Let's say payment wallet is something you gave. Is there any particular geography where the decline is happening? The way you define the income band, that could have been a good segment to look. New customer versus old customer. Is there an increase in churn? So looking into all those reasons. If let's say based on whatever I have found, I would also start with looking into merchants.
Okay.
So one more segment which you could have thought is what kind of users we are seeing decline. Is it like a normal individual user, or there are business? Because a lot of times startups or business can also take your credit cards, right? So which category we are seeing the decline, that could have been interesting. Similarly, where that decline is coming. So I was expecting you would talk about what merchant category, like is it e-commerce website, is it some kind of restaurants, is it like business payments, where that major decline is coming. So it will have helped us to identify that, okay, which user is exactly impacted, like enterprise versus individual customer, and which segment is seeing the major hit. From there, you can start making some hypotheses about user change in user pattern and spending pattern. So maybe there's a post-COVID, people are going more to office, so they are spending less, or there is a softening happening in market, so business are spending less. If you think about, there are a lot of advertisement on platform like Meta and Google, or they are also having like a lot of payments for AWS kind of platform, as there is a slowdown happening across these. So maybe startups are the companies where funding is drying. So these are some missing pieces which you could have also thought about. So I'll say if I have to rate this, I will rate it like 7 out of 10, 7.5. For a senior candidate, if this was an answer coming from like a junior candidate, I would have rated it 8, 8.5. So most of the things were there. It's just structuring it and communicating that structure upfront would have given you some more brownie points, and then categorizing your customers and the like the transaction field.
Okay.
So that would have been my feedback.
Sure, sure. And I think when we are categorizing based on which industry the merchant is, maybe that would have helped us answer if that category is an essential category or a luxury category or so on. Maybe that could have answered those questions as well.
Yep.
Makes sense.
But yeah, overall great attempt. A lot of positives, few things which could have been done better. And nobody can get everything correct. It's just you have to think about the situation, answer about it in 30 minutes. I think your domain knowledge in PayPal was very handy for this case study.
Yeah, yes, it was. So yeah, but I still could have covered few more things. But yeah, that is where I think I missed upon certain pointers.
But yeah, overall great attempt. So yeah, I think this is the point where we can summarize this mock.
Sure. So to summarize, the difference was across geographies, across customer cohorts, new business existing, across income bands as well. But what we noticed was that high and medium income bands, the decrease was much higher. So, and this decrease was throughout for both major credit card issuers, Visa and MasterCard. But the increase was majorly occurring for online transactions. So it could be multiple reasons, but at least the highlights from this is that customers' spending behavior might be varying, but we would need additional analysis to understand that.
Yep. So yeah, the TLDR, which I was also pointing towards, is there is some kind of softening happening on luxury spend, or if it's an enterprise kind of customer, it's more on like spending or AWS spending. So there's a change in user spending behavior due to market situations.
Okay. Yeah. Makes sense.
But again, it could have been pointed to any direction. This is one of the
yes. But given that this has been the trend across the world, this seems like a very viable answer.
And that's why I was pointing towards that there's a decline happening on a high value transaction. So
I was mostly thinking in terms of the customer. I was not thinking more in terms of the enterprise business customers. So that's why I couldn't go towards that direction.
So yeah, one more pointer to add. Generally, it is very useful when you are giving these interviews. Think about the product journey, like who are the users, how they are going to use product, what are the various kind of users. That is one more part which we should have added.
Makes sense.